Silvergate Capital has announced an orderly wind down of its bank operations after the collapse of crypto led to the loss of billions in deposits from digital asset customers. Yahoo Finance's David Hollerith has the details. David, so what does this mean for Silvergate and also for the rest of the industry?
Yeah, it's a good question. I think one place to start is that Silvergate doesn't directly impact retail investors. So Silvergate's this is more so affects crypto related businesses and also institutional investors. And it's an orderly liquidation, and it hasn't been proven yet or clearly stated whether or not that means a bankruptcy or a receivership, which is sort of a bank situation in this case. Silvergate Capital is a holding company, and Silvergate Bank is a FDIC insured bank. So we could see both of those in parallel or either one or the other, depending on what Silvergate chooses. But it's important to point out that Silvergate made this voluntary decision for liquidation. We're not really sure about what the discussions have been like over the past week. We do know that the FDIC, which technically isn't the regulator, but more so the insurer for Silvergate, has been at Silvergate headquarters since last week. What else we can point out here is that the company plans a full repayment of all deposits, which is obviously much cleaner than what we've seen with crypto firms filing bankruptcies themselves recently. So I think that it's important also to point out that Silvergate's situation was definitely a result of what happened in Q4 with the collapse of its major client, FTX. But ultimately, sort of what has led to its downfall was the drop in total deposits. And clearly, this comes from their largest client depositors having been crypto firms. But it also speaks more to not having a diversified banking business, and also to the fact that what happened was that when all these deposits were pulled out, Silvergate had to sell securities and debt so that they could give those customers their cash back. And in that scenario, it seems that they had to sell their securities at a loss. So they weren't necessarily holding high risk investments, but just from interest rates over the last year through 2022's hiking cycle, it's meant that they had to sell at a loss. And that kind of risk has sort of been crystallized now. And as a result, that's what we're seeing here. For crypto, it means the end of a crucial banking partner. A lot of firms pulled out last week. I have not spoken to any crypto firm that has admitted to still having Silvergate exposure. So again, the company says its plans to return all deposits. So at this point, the liquidation is orderly, but we're going to watch to see if this is going to impact other banks that work with crypto businesses to any large extent. So that's definitely the next thing to watch.
Well, and in just even more broadly than that, David, as we look at this collapse of this bank, it just has to lead me to wonder whether the ripple effect from FTX is over, right? Not just whether this bank's collapse affects other banks, but whether there are still sort of like some repercussions from FTX that are still echoing through the system that we haven't necessarily seen yet.
Yeah, I mean, I think that's entirely possible. In terms of the connections that FTX had, that bankruptcy is huge, and there are hearings every week on it. And as recently as Monday, FTX came out to sue Grayscale for their digital assets as a way to get more money for creditors. So, we haven't even seen clawbacks yet for FTX, and that could be huge for not just for other companies, but also politicians and nonprofits that FTX has donated to. So we'll definitely watch that. And obviously clawbacks take a longer time, but that's going to be a big one that the FTX bankruptcy will be focusing on.
Yes, I'm sure you'll be diving deeply into that over time. Thanks so much, David. Appreciate it.